Then let's go back to the questions, page 3. And then now we are doing 1.2. Refer to information C. Use the table provided to calculate the correct net profit after tax for the year ended 30 June 2021. Indicates plus for increase, a minus for decrease, which is 12 marks. So now we are referring to information C. Let's go to information C. Information C, the net profit before tax, which is the incorrect net profit before tax, which was provided in the answer sheet, is 4,918,950, was calculated before taking into account correcting the following. Audit fees include 123,600, which was paid in advance for the next financial year. So the audit fees included 123,600. So it means the amount for audit fees was extra by 123,600, which was not supposed to be there because it was paid in advance for the next financial year. So we need to add this 123,000 back. So it's going to be plus 123,600. Why are we adding this 123,600 here back into our profit? It is because when we were doing the income statement, we subtracted operating expenses, which is all these fees, which was extra by 123,600, which then decreased our profit. So therefore, this 123,600, which was extra, we need to add it back so that we are able to correct our profit. So that's a plus 123,600. And this audit fees of 123,000, which was paid in advance, is regarded as prepaid expense. We must remember this. Let's put it, because we are still going to do a balance sheet. So this is regarded as prepaid expense. This is prepaid expense of 123,600, so that we do not forget it when we are doing our balance sheet. We have a prepaid expense of 123,600, right? The repayments on the loan are fixed at 35,000 per month, including capitalized interest. The balances as per loan statement were on the 1st of July, 4,175,000, and 30th of June, it was 4,028,000. So these balances were before the interest on loan was considered as to how much was the interest on loan. But if you go to page 4, you will notice that the mortgage loan that is given there on the 30th of June 2021 of 3,755,000 has already accounted for interest on loan. So we can be able to get the amount for interest on loan if we can trace it. If you take this balance at the end, which is before interest on loan, which is 4,028,000, this balance given in the adjustments, which is 30 June 2021, it's 4,028,000. That was before interest was allocated. And then you go back here, you look at the balance for the mortgage loan, which is 3,755,000. If you can subtract that 3,755,000, let's take the calculator. 4 million, what's the balance here? It's 4,028,000, 4,028,000 minus, we have 3,755,000. That's equal to 273,000. We have 4,028,000 minus 3,755,000. 3,755,000. And that is giving us an interest on loan of 273,000. And this interest on loan is a minus. That's a minus 273,000, because interest has an effect of decreasing our profit. So our interest, how did we calculate? Let's go back a little bit back to this calculation. When you look at page 5, you have the balance on 30 June, which is before interest on loan was considered, of 4,028,000. That's the balance on 30 June 2021. But if you look at the balance which is given on information A, that's the balance after the interest on loan has been considered. That's the final balance of 3,755,000. So that's 3,755,000. So if you're calculating the difference between the two balances, you are able then to get the interest on loan of 273,000. Right. Then Roman figure 3, rent income. Rent of 74,000 was received from a tenant for the period of 1 July 2020 to 31st August 2021, and this has been recorded. This amount takes into account a reduction of 750 per month on the 1st of May 2021, and the year-end adjustment has not yet been made. There is a reduction of 750 per month. There is a decrease in this rent of 750 per month, which starts from the 1st of May, and this rent has been received up to August. So if you're calculating the 750, it will be May, June, July, August. It's for 4 months. This decrease is for 4 months. 750 multiplied by 4. 750 multiplied by 4 equals to 3,000. 750 multiplied by 4 equals to 3,000. So the decrease is 3,000. So the total amount of rent received, because if you counting the number of months from the 1st of July 2020 up to 31st August 2021, that is 14 months. So rent has been received in advance for 2 months, because that is 14 months, right? So the total amount for rent is 74,000, and there was a decrease of 3,000. So let's add back this decrease in order to get the total rent if it did not decrease. So it should have been 77,000. So 77,000 divided by 14. We want to get the rent per month before it decrease. So 77,000 divided by 14. 77,000. Let's calculate. 77,000 divided by 14. That's 5,500. So our rent income was 5,500 before it decreased. It was 5,500 per month before it decreased, but our rent decreased by 750 per month. So the total amount now minus 750, that is 4,750. Our rent is now 4,750 per month, and the income received in advance is for 2 months. 4,750 multiplied by 2 equals to 9,500. So the income received in advance is 9,500. So which needs to be subtracted from our profit. Our income received in advance is 9,500 minus 9,500. How did we do this calculation? The total rent that has been received for 14 months is 74,000, but we are told that rent decreased from the 1st of May, which is 4 months. So if we are calculating the decrease multiplied by 4 months, it gives us 3,000. Assuming that the rent did not decrease, what could have been the total amount received if the rent did not decrease? The total amount could have been 77,000, and if you divide that by 14, you are able to get that the rent income per month was 5,500 before it decreased, and it decreased by 750 per month, so it was then 4,750 multiplied by 2 months, which is income received in advance. That's 9,500. So rent income received received in advance is 9,500. Let me just write it down here so that I do not forget the income received in advance. The income received in advance, which will be part of a balance sheet, we have 9,500 for the income received in advance. Right? Okay. The following transaction, which is transaction number 4. The following transaction, which is transaction number 4, it says, after taking into account the corrections above, it was determined that an additional 85,250 is still owed to SARS in respect of income tax for the year. So an additional 85,250. How much has been paid, which is provisional tax payment? Let's go to information A, page 4. We have already paid 1,200,000 to SARS. We have already paid 1,200,000 to SARS, and we are told that we are still owing. We are still owing SARS 85,250. We are owing SARS 85,250, which then tells us if we have already paid 1,200,000 in the form of provisional tax payment, and we are given a statement to say we are still owing 85,250, that tells us that our income tax for the year is 1,285,000. Is 1,285,250. That is our income tax for the year. And then that's the end of information C. We then need to calculate the final, which is our net profit after tax. So 4,918,950. Please make sure that when you are doing calculation, you calculate it correctly. The zeros and everything, please make sure that they are correct. 4,918,950 plus 123,600 minus 273,000 minus 9,500 minus 1,285,250. That's 3,474,800. I'm advising students to make sure that when I am doing calculations, they are also calculating to ensure that should there be any mistake which is with calculations, you are able to correct it there. But we are doing our level best to ensure that the calculations are 100% correct when we are adding the total. But please make sure that you are also using your calculator to double check. If I may double check again, 4,918,950 plus 123,600 minus 273,000 minus 9,500 minus 1,285,250. That is 3,474,800. That is our net profit after tax, which is 3,474,800. And this one is now transferred to this note, which is retained income account. Net profit after tax. Our net profit after tax is 3,474,800. 3,474,800. That's our correct net profit after tax. That is why I said to you, because we are still going to transfer this amount, make sure that you transfer the correct amount. That is why I strongly advise students that when I'm doing calculations on the board, you also take the calculator and ensure that the amount that has been calculated is correct. Right. So we have transferred the net profit after tax to our retained income note account, and then the first column of the retained income note, which is the balance at the beginning, you will notice in your answer sheet that it was blocked, so nothing must be written there. That is why there is this shade. This column was blocked in your answer sheet. No amount was required to be there. So there is nothing, there is no balance at the beginning. So we have our net profit after tax of 3,474,800, and even the balance at the end is already been given, which is 3,240,000. It is already there in your answer sheet. Right. So you have your net profit after tax here, And another thing that is also required here, you have your net profit after tax, which is 3,470,000, but you have the buyback of shares. You have your dividends. And your dividends are divided into two. You have your interim and you also have your final dividend. So let's look at the buyback of shares. So these columns were given in the answer sheet. They were 1, 2, 3, 4 blank spaces. 1, 2, 3, 4. So we have already put in the net profit after tax there. You have your buyback of shares and you also have your dividends for the year. So let us look at the buyback of shares. There is information D on page 5. 26,000 shares were repurchased on the 1st of July 2020 at 3 rand above the average share price. They were purchased at 3 rand above the average. Remember, the average share price is recorded in the ordinary share capital account and the above average is recorded in the retained income. So we have been given exactly the amount that we need, which is above average. So it is 26,000. It is 26,000 multiplied by the above average. 26,000 shares were repurchased at 3 rand. They were repurchased at 3 rand above average. So let's calculate this. 26,000 multiplied by 3 equals to 78,000. Above average is 78,000. Above average is 78,000. Our above average is 78,000, right? And then dividends. Dividends on ordinary shares. Let's go to and check the dividends on ordinary shares. It says here the business did not pay interim dividends during 2021 financial year. So we have no interim dividend. And the final dividend of 65 cents per share was declared on 30 June 2021. 1,800,000 shares were in issue on 30 June 2021. So the final dividend that was declared is 65 cents because the business did not pay any interim dividend. So we have 65 cents multiplied by how many shares at the end? That's 1,800,000 shares. 65 cents multiplied by 1,800,000 shares. Let's do that calculation for the dividends. We only have the final dividends, no interim dividends. So 65 cents multiplied by 1,800,000. 1,170,000. Our dividends for the year is 1,170,000. 1,170,000, which is in brackets. Let me just double check now. Yeah, that's 65 cents multiplied by 1,800,000. That will give you 1,170,000. So that is all. So you have your balance at the beginning, you have your net profits after tax, you have your buyback of shares, and then you have your dividends for the year. Your dividends for the year are divided into two. You have your interim dividend and your final dividend. But in this case, your interim dividend was not paid by this business, so we only have the final dividend, which is 65 cents multiplied by 1,800,000. And obviously, we also have the balance at the end there of 3,240,000. And this final dividend, we know that the final dividend is declared in the current year and paid in the following accounting period. So the final dividend will also be part of this current liabilities. It is called shareholders for dividends. So let's just record it here before we forget. Shareholders for dividends. And the amount for shareholders for dividends is 1,170,000. 1,170,000. That's shareholders for dividends. Right. So we are done with the retained income note. Let us then continue to a balance sheet. Our balance sheet, you will notice that here the non-current assets in the balance sheet have been blocked. So the non-current assets were not required, even the fixed assets were not required, the financial assets were not required. We are only starting on the current assets. And the current assets, the total has already been given. It is 8,700,000. And then remember, you have your assets. Your assets are divided into two non-current assets, which in this case are not required, plus your current assets. That will then give you your total assets. And your current assets are made up of three things, and that goes under current assets. You have your inventory, you have your trade and other receivables, and you have your cash and cash equivalents. You have your inventory, your trade and other receivables, and your cash and cash equivalents. Under total assets, you have equity and liabilities, and then the first thing here, your equity and liabilities here section, you have your shareholders' equity, which is made up of two things. It is your ordinary share capital, plus your retained income. And then your non-current liabilities, the first thing, that it's only one item here, that's mortgage loan. Right, your current liabilities, the first thing that will go under current liabilities will be your trade and other payables. Very important to know the structure of the balance sheet. We have your trade and other payables. You will have your SARS here. You will have your SARS in bracket income tax. We'll also add other things if they come up. So, but for now, let us just focus on this. You have your current liabilities, which is trade and other payables. You have your SARS in bracket income tax. You have your shareholders for dividends and your bank overdraft. And another thing that I'm leaving out here will be your current portion of loan. Your current portion of loan. Right, let us then go back to the fixed assets, which is your non-current assets is not required, and your financial assets, they are not required. We are only required to do the current assets. Let's start with the inventory. Let's start with the inventory. The inventory note. If you go to your page 4, you will notice that there is trading stock of 4,198,500. There is trading stock there of 4,198,500. 4,198,500 trading stock. 4,198,500. There is also this stock which was not accounted for, that we calculated at the beginning, of 675,500. That's plus 675,500. That is our stock. That's plus, because we were told in that transaction that the stock was omitted. That is transaction B. The accountant omitted the closing stock figure of formal suit in the trading stock balance provided in information A. So that is why we are now adding that 675,500. And if you go to page 5 of your question paper, you will also notice that there is also another transaction there, which is transaction number F. which does affect our trading stock. It says on the 30th of June 2021, GMO Ltd returned 10 ladies' coats to the supplier, bargain wholesalers. The selling price was 1,750 and the markup was 25%. So if the selling price is 1,750, let's take our calculators and check the cost price. 1,750 is the selling price and the markup is 25%, multiplied by 100 divided by 125. So it means the cost price is 1,400. The cost price is 1,400, and how many units were sent back? It's about 10 ladies' coats. So that's 1,400 multiplied by 10, which then gives us 14,000. So this is the stock that was returned, or this was sent back to supplier. That's minus 14,000. And remember, the suppliers falls under current liabilities. The suppliers are our creditors. They will then fall under trade and other payables. So we then need to take into consideration that we sent back stock to the value of 14,000. Therefore, that should decrease our liability. Let's then take our creditors control is 1,253,000 on page 4. Our creditors control is 1,253,000. 1,253,000. Our trading stock is, our creditors control is 1,253,000. Right? And then we'll have to subtract this 14,000. We are subtracting this 14,000, minus 14,000. And then let's close. Why are we subtracting the 14,000? It is because these goods were purchased on credit. So if we are returning this stock, then our trading stock will decrease by 14,000, and at the same time our liability will decrease by 14,000. So let us now calculate the value of our inventory. That's 4,198,500. 4,198,500 plus 675,500 minus 14,000. Okay, 4,198,500 plus 675,500 minus 14,000 equals to 4,860,000. Our trading stock, our inventory is 4,860,000. Remember, I advise you to also calculate with me. That's 4,860,000. Right, trade and other receivables. Trade and other receivable, we are talking of our debtors. Our trade and other receivables here, let's open up the brackets. Our debtors control, which is net trade debtors, is 3,668,810. 3,668,000. 3,668,810. That's our trade debtors, 3,668,810. Remember that I said we need to remember this prepaid expense. We need to remember this prepaid expense, and this prepaid expense is of 123,600. Let's add it here, plus 123,600 prepaid expense. Is there any accrued income? Yes, we do have accrued income here in information A of 8,000 plus 8,000 accrued income. So we have prepaid expense of 123,600, and we also have an accrued income given in information A, which is 8,000. That's an accrued income of 8,000. Let us then check if there is any other transaction that should affect our debtors. If you look at information E on page 5, it also talks about the debtors. Debtors with credit balances totaling 11,000 must be transferred to the creditor's ledger. We need to transfer because they have a credit balance. It means they have a balance on the credit side. Remember, trading status control is an asset. On the credit side, it's a negative amount. So if you want to cancel that, you need to add 11,000. We are adding 11,000. We are transferring this to our creditors. That's plus 11,000. That's plus 11,000. 1,253,000 minus 14,000 plus 11,000. That is affecting our trade and other receivables. Right, let us also look at other adjustments. We have already done adjustment D. Adjustment E has been done. Adjustment F has also been done. Adjustment G. Let's look at adjustment G. Adjustment G, it says a fixed monthly installment of 35,000 to cover loan repayments and interest has to be paid over the full period of the loan. Interest will decline over the life of the loan. The interest on the loan budgeted for the next financial year is 234,000. Right, so this transaction, which is the last transaction, which is G, it affects our loan, our mortgage loan. Let's go to our loan. Let's go to our loan. Our loan balance, which includes interest, is 4 million, 30 June 2021. It's 4,028,000. That is according to information C. Our loan balance is 4,028,000. Our loan balance is 4,028,000. That is the balance that includes interest, because the balance that is information A that is given, which is 3,755,000, is without interest. Is without interest. So the balance that includes interest is 4 million, which is on 30 June 2021, is 4,028,000. And we need to take into consideration the information G, which says that we are going to pay a fixed monthly installment of 35,000. Let's calculate 35,000. 35,000 multiplied by 12. That's 420,000. 35,000 multiplied by 12 equals to 420,000. This is what we are going to be paying in the next 12 months on our loan. And we are told that the interest on loan budgeted for the next financial year is 234,000. So 420,000 minus 234,000. For the interest, how much will be the loan amount if we're taking out the interest? Minus 234,000. The loan amount will be 186,000. That's 186,000. Our loan amount will be 186,000, because we will pay a total amount of 420, and 234 will be taken by interest, and then the amount that will reduce the loan will be 186,000. So there's 4,028,000 minus 186,000, and this 186,000 will be regarded as current portion of loan. 186,000 will be regarded as current portion of loan. So let's calculate the mortgage loan total. The mortgage loan total is 4,028,000. 4,028,000 minus 186,000. 3,842,000. 3,842,000. That should be in brackets. Let's confirm this amount. 4,028,000 minus 186,000. 3,842,000. So our non-current liabilities will be 3,842,000. Our non-current liabilities is 3,842,000. So let us then go back. We have finished the transaction. Only transaction H that is left, which is for the financial indicators, which will assist us to get some of the amounts that are missing here. But let us then go back to close here. Let's just check before we close That there is nothing that we are leaving out in error here. We have our net trade debtors here of 3,668,810, and we have this prepaid expense of 123,600, and there is also this 8,000, which was this prepaid expense. This 8,000, we took it from transaction. Oh, this 8,000 was for the accrued income. Yes, we have this 8,000 for the accrued income, and we have this 11,000 which was taken from transaction E, whereby we were transferring some of the debtors to the creditors. So let us then close. There is nothing that we are leaving here. So let's then get the total for trade and other receivable. 3,668,810. 3,668,810 plus 123,600 plus 8,000 plus 11,000. 3,811,410. 3,811,410. That's 3,811,410. And let us check for cash and cash equivalents. If you go to page 4, information A, your cash and cash equivalent, your petty cash float and your bank overdraft, there is a question mark for that. So these figures, they are a balancing figure. So we'll need to put in this block here for the current assets. The current assets are made up of three things, which is inventory, trade and other receivables, and cash equivalents. So, but we need to look at the ratio that is going to assist us. Let me just clean this section. And before we even clean this 9,500, this 9,500 is for the income received in advance, which should go under trade and other receivables, 9,500. Right. Trade and other payables. Okay. Right, let's start with the financial indicators. We want to solve the missing amounts using the financial indicators, that is on information H. Let's start with the asset test ratio. The asset test ratio. The formula is current assets minus inventory is to current liabilities. That is the formula of calculating asset test ratio. Our current assets, they are given, it's 8,700,000. Our current asset is 8,700,000 minus our inventory, which is 4,860,000. Is to current liabilities. We don't know the current liabilities. Let's just first get the answer for this. 8,700,000. 8,700,000 minus 4,860,000. Minus 4,860,000 equals to 3,840,000. And the final answer for the asset test ratio is 1,2 is to 1. 1,2 is to 1. And then the next step here is to cross multiply. 1,2 multiplied by x, you have your 1,2x equals to. And then 3,840,000 multiplied by 1, that's 3,840,000. And then to get the value of x, that's 1,2. Divide by 1,2 both sides, 1,2. So x will be equal to 3,840,000 divided by 1,2. That is 3,200,000. Our x is 3,200,000. which is our X in this case is current liabilities. Our current liabilities is 3,200,000. So we have our current liabilities here. Our current liabilities is 3,200,000. Right? Let us then close the trade and other payables. Our trade and other payables will be 1,253,000 minus 14,000 plus 11,000 plus 9,500. Let me start afresh. 1,253,000. 1,253,000 minus 14,000, right, plus 11,000 minus 9,500, or plus 9,500. $1,259,500. 1,259,500. Very important to make sure that we're calculating the correct amount. 1,000 plus 11,000 plus 9,500. Yeah, 1,259,500 is the correct amount. SARS income tax, we were told here that SARS income tax, there was a transaction which told us about the amount that we are owing to SARS, and that amount was 82,000. It's here. The amount that we are owing to SARS, it's 85,250. That's the amount that we are owing to SARS, 85,250. And then bank overdraft. And then bank overdraft. Bank overdraft will then be a balancing figure here, because the current liabilities, they start from here. These are all current liabilities. These are all current liabilities. Trade and other payables, SARS income tax, current portion of loan, shareholders for dividends, and bank overdraft. These are all current liabilities. So the current liabilities, there is a total here, which is 3,200,000. And then to get this missing amount for bank overdraft, it will be 3,200,000. 3,200,000 minus 1,259,500 minus 85,250 minus 186,000 minus 1,170,000 equals to 499,250. 499,250. That's 499,250, which is our bank overdraft. Right. And even here with the current assets, there is here under current liabilities, the missing amount was bank overdraft. And fortunately, we had the total for current liabilities that we calculated using the asset test ratio. So if you are having the total and you have only one amount that is missing, you just take the total, you subtract all these amounts, because if you add all these amounts, you should get the total. So that is why we got 499. Same thing applies with the current assets. We do have the total of 8,700,000. Two amounts are here, and there is only one amount that is missing. To get that amount that is missing, it's 8,700,000. 8,700,000 total minus 4,860,000 minus 3,811,410. 3,811,410 equals to 28,590. 28,590. So our cash and cash equivalents as the balancing figure is 28,509. And if you are adding those three amounts, you should be able to get 8,700,000. If you take 28,590 plus 3,811,410 plus 4,860,000, you should get 8,700,000. That's correct. Right. The last calculation that we need to do now is the calculation that is going to assist us to get the shareholders' equity. And what is it that has been given here is the net asset value per share. Let me clean this one. I hope you have jotted it down. Now we need the NAV, net asset value per share, which equals to the net asset value per share. And then the answer for the net asset, it is ordinary shareholders' equity over number of shares issued. Over what? Number of shares issued. Our ordinary shareholders' equity is not given, so it will be X over the number of shares issued. The number of shares issued, there is a transaction which told us about the number of shares issued, which is 1,800,000. That's X over 1,800,000. And then the answer here is 540 cents. That is 540. That's like over 1 here, and then you cross multiply. So your X will be 1,800,000 multiplied by 540. That is 9,720,000. So our shareholders' equity will be 540 multiplied by 1,800,000. 540 multiplied by 1,800,000. So our shareholders' equity is 9,720,000. And the shareholders' equity is made up of ordinary share capital and retained income. Ordinary share capital and retained income. So 9,720,000 minus 3,240,000 equals to 6,480,000. 6,480,000. And if you take this 6,480,000 and add it to 3,240,000, you should be able to get 9,720,000, which is our shareholders' equity, ordinary shareholders' equity. And then now we need to calculate the total at the end, which is the total equity and liabilities. The total equity and liabilities will be made up of these three totals: your shareholders' equity plus your current liabilities plus your non-current liabilities. So it will be your 9,720,000, 9,720,000 plus 3,842,000 plus 3,200,000. 16,762,000. 16,762,000. 16,762,000. And then the total equity and liabilities should be the same as the total asset. So then the total asset will be 16,762,000. So this is the balance sheet, the statement of financial positions. Very important for students to be clear with this. What is important here is that each and every transaction that has got to do with the adjustment, you need to make sure that you remember that things like prepaid expense, things like income received in advance, because if you did a calculation and then you forget to transfer it to the balance sheet, you will then be getting incorrect amounts in your balance sheet. Remember, the first calculation that we did here, which was for the closing stock for inventory of 675,500, that calculation was also required here, because this 675,500 was not included in this inventory, so therefore we had to add that 675. Remember the 123,600 prepaid expense for the audit fees, it was also required that we add it in our trade and other receivables. The 9,500 income received in advance is also part of trade and other payables. So it is very important that each and everything that you do, you remember it and you transfer it accordingly. Your dividends for the year, which was the final dividend of 1,170,000, it is also part of the balance sheet, which is shareholders for dividends under current liabilities, 1,170,000. So this brings us to the end of our question 1, which is taken from the November 2021 exam, accounting paper 1. Thank you.